Feels like a more risk-on kind of start to the week than maybe we thought we'd get, judging by the action we saw last week.
Yeah, I mean, maybe it's just a Monday morning thing. We tend to be less optimistic on Fridays in the past couple of weeks. What I would say is we had bank earnings last week, the start of the earnings season, a key thing to watch. Those earnings actually came in quite strongly, despite the fact that you had analyst expectations ramping up into them. But maybe more importantly is within this data vacuum that is the U.S. government shutdown, it was a strong signal to the U.S. economy. And there are a couple of things I'll point to. The first is loan growth. That's bounced, and that tells you that banks are not really that worried about credit conditions if they're more willing to lend, but also that households and corporations are confident enough to borrow. And then more importantly is loan loss provisions. And those were at healthy levels consistent with previous quarters. So you're able to absorb losses, but you're not unduly worried about them. And that data also fits with what we've seen elsewhere. So the Fed has some data on household disposable income relative to debt servicing costs. And again, healthy levels.
So everything is fine, is basically what I'm hearing.
I think, I mean, that's generally what I'm seeing in terms of you get concerning headlines, as in bankruptcies are higher than they were 3 years ago. And that obviously creates some flashpoints in terms of that sounds very worrying. But what I'd say is a few years ago, we were at very distorted levels. So because you had COVID, this massive stimulus, both from a monetary and fiscal perspective, it meant that your bankruptcies were at multi-decade lows. And so we're now just normalizing from those levels rather than seeing something more concerning. And it actually looks like we're stabilizing at a good level now, and the delta is improving. And in particular, if you look at business bankruptcies, they're down from a year ago. And you'd also just think you're more likely to have a systematic issue on the way up than on the way down, right? So we did see some vulnerabilities exposed when the Fed was hiking. SVB is the notable one, but we've had 125 basis points of easing behind us, and we're also getting fiscal stimulus.
Skylar, I'd also think what last week showed us is that fears of a credit deleveraging or a credit event really outweigh that of an equity bubble that could have a more meaningful impact on U.S. economic growth. How are you weighing those two risks at the moment, thinking about overvaluations in AI versus these credit fears?
Yeah, I mean, I think about overvaluations in terms of how the market's trading. So we saw that last week and the week before, right? You get more reactionary to headlines because you have valuations that are very elevated levels, and some parts of the market are looking more frothy. So one of those is gold, but I don't think it's unjustified because you have earnings that are coming in quite strongly. So the reason you get shaken is because you worry about growth. Now, that's understandable. You have quite a lot going on in terms of tariff worries, inflation worries, politics worries, but I think you need to recognize it's creating a choppy trading environment. But as news comes in, you need to think about the actual economic implications of that rather than anything else. And that should guide you. And we will actually get some U.S. data this week. So we will certainly be watching that closely.
We're going to get a lot more regional banks this week, though, aren't we?
Yeah, but the ones that came in on Friday
were better.
Were very good. I mean, the loan loss provisions came in lower than expected for Truist Financial. It jumped 5% after those results. Really led the whole sector to turn around on Friday. It might just be that this is kind of a snap worry and we're over. I mean, you think about what actually happened. Zion's had a $50 million write-down, and it caused a $1 billion market cap loss. I mean, it was very out of proportion with what was going on. But that was just kind of reminding us that there is this worry out there that these small one-off events might all get putting into a bigger bucket. Exactly.